It's about that time of day again, isn't it? 10:45 a.m. It's 10:45 a.m. now, folks. This is Joseph James. Welcome back here. Thanks for sticking around. Friday morning, non-farm payroll Friday. We came in this morning. We had one thing on our minds, didn't we, guys? Yeah, that's right. I heard there was some news coming out today. So we come in this morning. The first thing we talked about this morning was, you got it, non-farm payrolls news. Now, Fridays are always a very specific strategy that we use, but then you go throw in a non-farm payroll Friday, and now all of a sudden we have to tweak that Friday routine a little bit even more. The most important thing we remember when we come in first thing on a Friday morning, and this might be Friday evening where you are, but for the U.S. morning session, Friday morning, we come in on a Friday, I think two things. One, time is not on my side. The later we go today, the worse the price action is going to be. Okay? So again, time not on my side on a Friday. The second thing that I think about is that there are going to be these windows of opportunity that will open and close. And that's referring to price action, to market personality. In other words, there are going to be times on a Friday when everything is moving. And then sure enough, lickety split, 10, 15, 20 minutes later, it's dead asleep. And then just when you think your morning's over, all of a sudden, new lower lows, new higher highs, right? What's happening is on a Friday, early in the morning on a Friday, you've got traders who are coming in trying to get stuff done before the end of the week. Late morning on a Friday, now you've got all the Hail Mary traders. Think about what's happening if you were working at a major money management firm and your boss was up your rear end trying to get some work done or trying to get this trade closed out, or maybe you haven't hit your number this week, or maybe you're in the red this week. Now the Hail Marys come out. So at the end of the day now, all the smart money, they've already got their lunch going. They've already got the barbecue, the boat, the RV warmed up for the weekend. They're already getting the weekend started. Now we go into 10:30, 10:45, 11 o'clock on a Friday, and now a lot of the traders that are still there trading are either rookies and are oblivious to the whole situation. They're sharks, which means they know what's going on. They're well capitalized, and they're here to take the money from the rookies. And then you've got the Hail Mary traders. Then you've got the guys and gals who know that they probably shouldn't be trading, but they're going to come in and do it anyways because they have no choice. So whether it be because they have no choice or because they're unaware of the situation, the big money leaves the building shortly after the last news event on Friday morning. This morning it was 10 o'clock. We had consumer sentiment, which came in lower, by the way. So 10 o'clock comes and goes. The personality changes dramatically, and we saw it happen right here in real time. So as you can see here, once again, the morning prep, vital this morning, as we always do. I'll tell you, if you go over to our blog right now, Sideways Markets, take a look at the morning prep this morning. And just like we always say, hindsight is for the birds. Let's take a look at what the plan was today. Now, let's go right to the Russell, because the Russell's right there in front of me. Let's look and see what we talked about today at 8:30 this morning. We usually do the Russell last because the Russell doesn't open up until 9:30. But I want you guys to see that this morning prep is our roadmap. Okay, a lot of traders don't do this work up front. This is why I do this methodically every single day. So let's take a look at the plan on the Russell. Now again, the chart on the Russell was posted at 7:30 a.m. so that everybody could use it. You don't need to be a member to get that chart. Great, just use the blog, sidewaysmarkets.com. Now, we always plan, what if price rises? What if price falls? Let's take a look now. As price rises, what am I doing? I'm selling at the highs. Okay, but price didn't rise, Joe. What did it do? It fell. So we never got a chance to execute the rising price. Now all we get as price falls lower. So as price falls lower, we're going to sell below the previous high of day. We'll take a final profit target at the previous low of day, and then we'll look to buy the previous low of day and take it right back up. So the goal today on the Russell, published ahead of time, we planned our trades, and then it was time for us to go out and simply trade our plan. This is when things got really easy. The Russell gave us just a perfect example of how to do this today. So again, the Russell, when we first began this morning, here's what we saw. So when I came in this morning and looked at my Russell chart, here's what I saw. I saw the previous high of day. I saw a price that was just above the previous high of day. And you may have heard me a mile away when I was screaming, do you see it? Do you see it? What do we see? We were above the previous high of day. We knew we had the previous day's trading range right below us. Again, this is probably the third time this week we've done this on the Russell. Every time we make some great money off it. And so sure enough, we know that if price goes higher, I'm going to sell. So whether you sell at the highs here or you do what we did here, and that is sell back below the previous high of day, following the plan. Now, at this point, our goal was to take it all the way down to the previous low of day. Remember, that was our plan. At 8 o'clock this morning, 8 o'clock, 8:30, we published this. Our plan was to go from the previous highs down to the previous lows. Nothing new there. But this is where we got to take out a little bit more specifics. Now, take your eyeballs here a little bit lower and a little bit further back. Look at the low there. And then you get another low right here that was earlier this morning. You take those two, and what does that give you? That gives you a trend line. Well, we then took the high, and then we went back a ways back, and we found another trend line. And so that created a wedge. So now we knew that the previous low of day target was going to be a little bit unrealistic. That's the ideal target, and that is where price will probably end up by the end of the afternoon on Friday. But since our goal as day traders, remember, we're day traders, which means we're not trying to grab the whole move. We're trying to pick up pieces of the move. Okay, just like a surfer out here in the coast of Los Angeles, he's not going to grab the whole wave. He's going to take only a fraction of that wave. If he gets in too early, he misses the wave. If he stays on the wave too late, he crashes his board on the beach. Right? So just like a surfer will only take his portion of the wave, a trader will only get a portion of each trade. It's fine by me. We make plenty of income because of it. So you zoom forward here now, and you're going to see what happens. Right? It's going to bounce right off that low. That, of course, is where we have, that, of course, you get that analogy, Stefani. You're a SoCal gal. We bounce right off that trend line now, and now we have our final target. Right? Now we've got our final target. We take our profit target at the lows, and we just finished talking about how we can grab it at the lows and now buy those lows and bring it right back up. Here's that trade you can see on the Russell, and you can see here by planning ahead, we earned $500 selling short on the Russell, just above $500. We also did the same thing on crude oil. Sold the highs of the range on crude, made some money there. Bought the lows on crude, made some money there. Tried to buy the lows on the Russell. This is when I walk away. When I get to a point on non-farm payroll Friday, and again, non-farm payroll Friday, it's a Friday on steroids. It's going to end a little bit earlier. Okay? It's going to fall asleep a little bit earlier. Traders are going to hit the exits earlier because they've been working like dogs all week in their offices getting ready for this report. So now they're going to get the heck out of town once the last news event comes and goes. So the news comes and goes. I take that final long on the Russell, bounces me out. As you can see, we got a winner on it first. I tried to leave my stop back a little bit too wide because it was so sloppy late in the morning session here. I know 10 o'clock is not that late, but it is for a non-farm payroll Friday. So at the end of the day today, you can see here, our prep work on the Russell made everybody some money today. And again, we called that so far ahead of time, everybody was able to participate. And then you tried to buy the lows, just too late in the morning. It was too late in the morning for an NFP Friday. Crude oil was the same thing. Crude oil, you come out here and look at crude. Crude, same thing. We find crude oil here at the highs. This was clutch. This is classic school of trade room. That's a fake out, breakout, a token print. And this was the very first thing we looked at today. The very first thing we saw today, the very first thing we talked about was we came into the market and we saw crude had gone out and pushed a new higher high. So when crude went up and pushed a new higher high, we're thinking, man, maybe we can buy this and keep it going higher. After all, non-farm payrolls, lower unemployment rate, more jobs than they were expecting, looked pretty bullish to me, right? There was also a gap up, which meant that the buyers were a little bit stronger. It also meant with that gap up, if the buyers failed, look out below. So the first thing we noticed this morning was we were looking for a wave long to keep going. What did we use though? Does anybody remember what we did at this point? We read tape. And what didn't we see? We had, I believe it was 77. It was 77 was the level that we were looking for buyers at. We got buyers at 76. And just as fast as it went to a new high, again, just a 1 or 2 tick new higher high, we called it a token print. You can go right to our blog right now. In that little keyword search box, type in token. You'll learn all about a token print. A token print is defined by the speed at which it reverses. And it usually makes a 1 tick higher high or a 1 tick lower low. And by 1 tick, it really could be as much as 3 or 4. It really could. Just a little higher high, reversal just as fast as it went up. So when we saw that happen, we realized buyers had failed, token print, and right at the same time, we noticed we had a gap. The gap on crude, we use a specific, what we call the floor chart. We noticed a gap on crude. Now, the gap, of course, was right here. There was your gap. And at this point in the morning, we found ourselves right there. So we had all of this space here now that we thought that price would get sucked right back down in after seeing the token print buyers failing, after seeing what we thought the news should have been bullish, and clearly they didn't react bullishly because of it. So we sold the highs, following our plan, using the opening range, using the token print, and using the highs of the range, right? Selling the highs as our guide. Those are the 3 reasons why we got short. Now, I won't lie, guys. This one really stunk here because I've managed to bobble that final target. You'll notice the first trade of the morning, it went big time. I had a huge runner target on this. I was up about 35 ticks on that runner, had an easy way to lock up that 35 tick runner, and I decided to hold it. In hindsight, of course, hindsight's 20/20, but in hindsight, definitely need to be more conservative with taking my profit on a non-farm payroll Friday. And this is something that I'm very adamant about with my clients. I want you to see every mistake that I make, and that's a mistake that I made today. I'm a human being, so are you. It's probably better now than later that you realize that you're going to make mistakes just like I am so that you don't beat yourself up over them. Mistakes are going to happen. Right? Don't cry over it. Get back on that horse. Get back to following your plan again, but learn from this. If you don't learn from these mistakes, you're never going to avoid them in the future. Right? If we don't learn from our past, we're destined to repeat it in the future. As you can see, though, I'll dry my tears with the almost $1,000 we made today on a non-farm payroll Friday. There's nothing better than making $1,000 on 4 trades. And as you can see here, we've planned our trades. We traded our plan. And again, all this stuff is posted at 7:30, 8 o'clock in the morning, right? You go look at crude here. Here's the crude prep. So for the crude prep, we can see the price wedge on the anchor chart. Okay, so we knew that. Let's see here. We may see strong sellers, market personality. In that event, we looked for retracements to sell short. Absolutely. So we looked at the highs of the range, sell the highs. Again, put together the plan, plan your trades, and then trade your plan, folks. Excellent job today, everybody. We got a little bit more time to answer all your questions, so if you have any questions for me, please feel free to speak up. As you can see, this morning is pretty much dead asleep now. It's just before 11 o'clock right now on a non-farm payroll Friday. Now, we'll be coming back here on Monday morning at 8 a.m. Eastern Time. Don't forget our schedule every day. Our schedule here Monday through Thursday, of course, on a Friday, though, will be a little bit different schedule. Here's our schedule for next week. Next Monday, we've got at 3 a.m. Eastern Time, we open up our live trade room for our London traders. At 8 a.m. Eastern Time, I open up this trade room here in the U.S. for the U.S. morning session. 9:30, we got your U.S. markets opening up. At 11 o'clock Eastern Time every morning, we always take time to review our trades and do some live questions and answers. We always take the time to answer your questions. We have on Mondays and Wednesdays, we do group training, 11:30. On Tuesdays and Thursdays, I do private, what I call concierge training. And then, of course, at 1:30 in the afternoon, we're back at it, trading the afternoon session, and that goes until 4:15. The afternoon session will die off there about 4 o'clock in the afternoon. So that's our schedule for next Monday. The only difference on a Friday is we don't trade or do training after 11:30, but give you guys a break and get your weekend started. All righty, so now you know what to expect for next week. Let's open the floor once again for questions. Once again, I want to thank everybody for being here. It's been a great week. It's been a great month of December. Don't forget to get that holiday shopping done this weekend. You're getting close to the holiday season here. Hanukkah's right around the corner. Let's keep going with some questions here.